Welcome back. We are now Monday, June 16th, and the big bit of news that we have coming out this week is going to be a rate decision by the Fed. Now let's take a quick look here. The Fed meets 8 times a year, roughly every 6 weeks, but they always meet on a Tuesday and a Wednesday and then make their rate announcement on the Wednesday. Okay. Now these can be very volatile. Let's take a quick look here. And if we go back to January 29th, all right, so here's January. There's the 29th. This one was actually fairly tame, but we still ended up with a range on the day of 5.68. Notice that we went both up and down. Okay. Next one was March 19th. So similarly, if we find March 19th, there we are. And again, we were both up and down, a wide range for the day. This time we had a range of 10. And finally, if we go to May 7th, there we go. May 7th, we had a range of 9. So pretty volatile. So there's a lot of ways we could trade this. We could guess which way it's going to go. All indications are that the Fed is not going to change anything. What could make the markets jump up and down is what they say going forward. Now, of course, they could always surprise everybody and make a rate change. If they did, that would definitely move the market, but they probably won't. But depending on what they say afterwards, we could very well have a wide range. So we could make a directional guess, a lot of different ways to put on a directional trade. We could do a far out of the money vertical. But if we did that, notice that we can't get too good of a return. For example, if we're, say, 10 points out of the money, we'd be selling at 7 and buying at 7. We'd be lucky to squeeze a penny out of that. By the time you pay commissions, you wouldn't get too much. We start to go a little closer. Let's say we went 5 points closer. Now we'd only bring in between a nickel and a dime, and then we'd have to pay commissions out of that. Another thing that we might consider, and we would want to look real quick, is there a bias which way we're going to go? Right now we're having a pretty good sized up day today. We're at 534 and change. So if I go below 534 and I look at the puts, we're at about 87. If I look at the calls going the other way, we're at about 87. So nothing's really not egregiously outpriced. We're pretty well balanced between puts and calls. But what if we said, okay, I am going to sell the 36s and buy the 35s. Now both of these are slightly out of the money, but we only have a 1 point spread, and so we could get a credit that is better than 1-to-1. Ignoring commissions for a moment, as of this second in time, we could make 59, we could lose 41. It would look like this. So this is what we'll try. Now we may or may not fill. We'll see. I'm sending this now. Well, all right, we got filled. We'll check in tomorrow. Now, if I were to get, and this probably will not happen, but if it were to move in our favor and we were to get about a 10%, I might stretch that out a little bit given commissions, so forth. But if I could get a 10% return on this before the announcement, I'd probably take it. That probably won't happen because people are waiting for the Fed announcement. So that's probably where we'll see the most action. All right, be safe out there. Trade well. We'll see you tomorrow. Bye for now.